Hey everyone, Les here from BG Trading and I hope you are well. Today is July 18th, 2023 and we're going to be analyzing some of the stocks that you have chosen for us on our free Facebook community, Buy, Grow and Sell Strategy for Share Traders. I will be putting the details at the description below. Every week or every couple of weeks, we post the opportunity for our members to bring it up some of stocks they like and they want us to analyze. But those stocks, they must not be any stock. They has to follow some certain indicators and some certain KPIs that we have already established, which one of them, the most important one, is there has to be trading at what we call technically discounted price by BGS20 strategy, which is our proprietary strategy. Okay, so the list of the stocks are, the first one is PGH, which is PACT Group Holdings, A2 Milk, PDN, which is Paladin Energy, NVX, which is NOVONIX, and GLN, GALAN Lithium. I've just noticed that one of the stocks is not actually at technically discounted price, which is Paladin Energy, but I will discuss that stock regardless anyway, just so we can have a little bit of idea what's happening with Paladin on the overall context, especially considering the uranium prices are actually heading higher, and we could potentially see further upside for Paladin Energy. Let's start with PACT Group Holdings, which the SX code is PGH. And this company in particular, I was actually interested to understand why the share price has fallen, because it is a company that has been sort of growing year on year on a sustainable basis, which is good. If you look into the SX website, you can even look at what looks like here in terms of net loss, and then the company becoming net profit by 2020. Continues to be net profit by 2021, but it starts sort of sliding down a little bit as it grows. Then in FY22 and potentially now in FY23, where we'll see a further sort of degradation of this net profit. We still yet to see what's going to come into the full financial year result. But the interesting thing is that the revenue continues to grow. Okay, so the problem here is the EBITDA. The latest market update, and I even got here, which was released on the 15th of March, was disappointing. And obviously the market ended up selling off, and the stock has fallen ever since 42%. 42% with a 27% recover, and then now sort of correcting. And it looks like it's heading higher, recovering, but we still want to see some of the key elements on that. So look, this is the announcement. I really recommend for you guys to go on your platform and take a look exactly what says on this announcement. But essentially, the reason obviously the market has sold off this stock is that the earning guidance is not as good as expected, and that is due to some tightening economic conditions, softer demand in Asia, and recent weather event in New Zealand that has once again softened the demand outlook for the last quarter, therefore compromising the second half of FY23 results, and potentially the stock has been already been priced upon this downgrade, sort of speaking. But looking from the technical aspect, as you can see here, the stock was worth in about $4.60 in August 2021, and then it has fallen all the way down to 60 cents, which obviously is reflecting this this shrink on net profit. And And kind of sitting into a really interesting area here, which is a technically discounted price for the long term, but it's sort of looking into a bullish intersection, level 1 and level 2, with some green Fibonacci, which is exactly when we really like to be buying the stock, when we have this bullish intersection again. As you can see, the latest bearish intersection was in March, and then ever since that bearish intersection happens, and that's why it's important to understand that bearish intersection is great protection for capital in case the stock crashes. From that bearish intersection, there was a 52% down on the stock. And then obviously, what we normally look into if you're applying BGS20 strategy is to find out where is the next bullish intersection after the bearish intersection. So bearish intersection right there. Okay, so wait till the stock to fall, then where is the next bullish intersection, potential reversal? Look, apart from the volume still looks really light to me. I would love to see higher volumes than that. But apart from the volume, the chart formation itself looks pretty good. Unfortunately, the volume it's too low, so you have to be careful. We can buy now, but you have to be careful because the volume is too low, and we could see a further downside for this stock. Obviously, company like this is highly tied to its fundamentals, so we need to see a better than expected FY23. But provided that we had a downgrade already, we could see an upside since the market has been already disappointed by this downgrade in March. For me, this is a buying signal here. So I'll be putting PGH a buy opportunity as per the BGS20 strategy. Obviously, like anything, you have to have target. If you trade in this stock, you will be looking at into 20 to 40% target. If you want to learn exactly how we set up targets, I suggest you to take a look on our online trading course. And we now launch Trading Mastery, which is a super compelling content course that will teach you exactly how to set up targets. Okay, so just hit bgtrading.com.au for that. Now, the second stock I want to analyze now is GALAN Lithium, which the SX code is GLN. So essentially what's happening now, lithium prices is going nowhere at the moment. If you obviously can look into lithium prices, see what's happening with commodities. And this is one of the sites I like. I love looking into, because it shows all the pretty much what's happening with all the commodity markets. And if you look into lithium prices, the problem with the lithium stocks, and then if you've been following us, you know we're holding a core lithium at the moment. Okay, so the lithium market is not moving essentially. So you look at these lithium prices here, it's just steady since May. Hasn't moved, has bounced but hasn't moved, and then obviously that spooks the buying activity in most of the lithium stocks, especially the ones that is not yet producing, like GALAN Lithium. So for me at the moment, it is a bearish formation there. So there's better quality lithium stocks at the moment, and I would stick with producer for the reason I've just been pointing. Market's not really benefiting speculative stocks and stocks that come from companies that are not yet producing or not yet generating any solid revenue. And that's the case of GALAN Lithium. I wouldn't touch, although it is trading in technically discounted price. I would not touch those stocks again. They are highly tied to fundamentals, and even though you could see some potential good announcements, I don't think there's enough traction in the market at the moment for this particular stock, unless we see a major reversal on the lithium prices, which we haven't seen any yet. So we're sticking with producers at the moment rather than developers. The third stock I want to take a look is NOVONIX. NOVONIX is obviously highly shorted stock, highly manipulated, in other words. When we have stock that has been highly shorted, just like a Novonix, the upside is really good because we see a potential bounce, potential short trade cover, and then obviously people pulling out, jumping out, buying back the stock, not just because it presents a good opportunity, but buying back because they're covering the short positions, and that's what probably why we see those really strong bounces on that particular stock. So graphite stock holds very compelling technology, does a lot of consultancy for lithium companies. This particular company is a trading stock. So every time the stock has been hitting the bottom here, which is what we call hypothetical support level, around 92 cents, it tends to bounce really strongly. And in this case, we saw this primarily bounce here of 20% back in May, and then another bounce here of 32% back in June. And then we could see a further bounce now, which was only 14%, but we could see a continuation and therefore sort of completing 30%. I think this stock at the moment is a buy for the reason it's trading sidelines, and we could potentially profit out of this trading the stock within this range here. And obviously trading at technically discounted price, not just for the short term, but also for the long term. NOVONIX for me is a buy. Obviously speculative buy with stop loss under 90 cents. So I'm going to put in buy for NOVONIX, okay? Obviously, we need to see what's happening with the fundamentals with the FY23 report. How much has actually this company leveraged? Again, going to be a net loss, obviously. But the reason this company has fallen so much is because the last financial year, by memory, was a huge net loss. Let me just take a look. This is a high level analysis. Again, I'm not going in deep here, okay, but I'm just going to show you one of the reasons the stock has fallen all the way down from $12. Pretty much $12, which reached the peak of hype, which was here. There was a net, in FY 2021, there was a net loss of a very consistent net, decreasing net loss and increasing revenue, which is exactly what we want to see in a company. There was a great hype on that, but then the company report this massive $71 million loss with only $10 million revenue. And then it spooked the market, and then everyone starts selling like crazy. Also, this stock behaves as a tech stock for some reason, and with hike of interest rates and monetary tightening, there was no much momentum at all for this. But we could see a turnaround here, like those high volumes on the upside, and then this sort of it's kind of constructive volume here on this sort of level, and that's pretty much what excites me in this regard, this construction volume here. And then obviously we had this high volume on the downside. It's highly manipulated again, but under $1, I think this is definitely a buy. Once again, NOVONIX buy. So let's jump to A2 Milk. A2 Milk, being a disappointing stock for quite some time, but we've seen here what we could be definitely a reversal. And again, almost a bullish intersection level 1 here. We want to see, ideally, the yellow line crossing the red line here. A2 Milk is currently trading at technically discounted price, which is obviously a buy opportunity for us. Not only for the short term, but for the long term as well. So buy under $5. What is the, $5 $5.14 actually is the SMA. So anything under $5.14 is technically discounted price. Whatever happens with this stock from now on will depend on the FY23 results, full year results for FY23, which is yet to be released. We're probably going to be looking at within a month time. So this is again a company that has been disappointing the market for quite some time, but looks like we are heading to a reversal here. And if the results are better than expected or in line with expectation, I'm very much going to going to see we're going to see the stock heading towards $7, which offers opportunity of 38% profit should the FY23 financial results be better than expected, or at least in line to the expectation. If it's in line to the expectation, I think the stock could take a little bit longer, but could well go to start building up some momentum to the upside. So that's A2 milk. Now the last one, PDN, Paladin Energy. PDN, Paladin Energy. It's always important when you're going to trade stock like this. Paladin is still used to be a producer, and then stopped its production. Now is set to produce in the first quarter of FY24. I think we even have a stock analysis for. And that, by the way, this is kind of a material that we generally provide to our VP members. Some compelling access to fundamental analysis for companies that we are actually analyzing or we are actually trading. So understanding the fundamentals of the company, understanding what the actual business does is critical to success, and obviously to go home and sleep once you have your money landed in a certain business. First, there's some highlights here, and I'm gonna go a little bit in depth on in Paladin. But uranium prices has soared, and we can see right here as well. Yeah, uranium prices softened to below $56 per pound, extending the decreasing of the third week since hitting the 14-month high of $57 per pound. But it's still trending to the upside. So that's why I think Paladin is a good stock to have, especially now it's trading still a technically fair price. I wouldn't be buying Paladin now. I would wait for some potential disruptive announcement or potential fall, but it is holding very strongly here. Unfortunately, with low volumes, which doesn't give us extremely excitement about that, but it's still positive. So some good things about Paladin is some offtake agreements. Obviously, Paladin has 5 uranium offtake agreements with leading counterparties in the US, Asia, and Europe. Paladin has finalized contract negotiations on the final outstanding tender award and expects the offtake agreement to be executed during the current quarter. We haven't actually heard that announcement yet, but as soon as we heard the announcement, we could have a rally from that. For us, it's a hold, not buying. I wouldn't be buying now because it is not trading a technically discounted price, okay? So I hope you guys enjoyed. This brings us to the end of the video. Before I leave, I just want to let you know that we are now launching the Trading Mastery course, which is a very compelling course that will teach you everything about BGS20 strategy, also how to find the key fundamental metrics that you need to know when you buy a particular stock in order to assess the potential risk of that particular trade. So you want to know the risk of the trade. You know, here at BG Trading, we don't only look into the chart formation, but we want to understand what's happening with the company. Although the market is highly manipulated, we want to make sure we are sitting into a good quality company if we eventually have to hold a position that is a negative, opposed to just a company that generates absolutely no revenue. Very important to do that. And All this information will be in this Trading Mastery online course, the details and the description below. Thank you very much for your time. I'll see you next video. Bye.